Good afternoon. This is Mac with PriceActionTradingSystems.com, and we're going to do a quick chart study today. I'm only going to take about 5 minutes today, just to show you a couple of things. This is what our chart would have looked like at the open this morning. Here was the close at 3:15 on Wednesday afternoon, and this is what we had during the overnight. Again, like I say, I always use the 24-hour chart. And this is what we would have been looking at right before the 8:30 open. We had this trend line coming off this first couple of bars up here, and you can see prices had pulled up here. This was just before the 8:30 open, so this is what we were looking at. Now this would have been a good setup right here for a short. Notice this. You got your downsloping trend line. We just kissed right off of that trend line. We got a bearish bar right there. So going short right there would have been fine. And you can see we would have been out on the very next bar on our scalp portion. And because we were in a trading range, it wasn't so obvious that there was a trading range across the top until after this bar was created. But you can see we kind of had a double bottom, and I probably would have had my line right there at this point because that's where the bottom two closes were. So you see there was plenty of room to scalp out up here at the top. We put our order right there. Our entry would have been 50. Looks like our entry would have been 54, and you see this is already at 52. So there's 2 points in that one bar right there. So we scalped out easily. I probably would have scalped out in full on that trade, or at least would have looked to exit any runners right down here. Let's just see what happens. Let's just take it about. And you see prices stalled immediately right there. So any runners, you would have got stopped out on any runners. And where do prices go? Right down here where you figure they were going to go. And then they start bouncing again. And we're coming back to the trend line here. But this time we're getting through. So now we got our break of the trend line. We're still not looking for any longs. We're really in a trading range now. So we're not looking to go long or anything like that. We got to wait for a retest. Prices are just getting choppy. There's way too many overlapping bars. There were too many overlapping bars here to really like that short. And you can see it would have worked. It was good for a scalp, but then prices are pulling right back again. We're headed back to test this top again. And there we are. Now we got a bar right up at that top, and you see what happened. Prices reversed right off that high again. And now we'll probably work down here to the low, and you see we're working down again. And there we go. Now we finally break through right here a little bit. But we can't sell a breakout. We know we're going to get a retest most likely here. And prices are breaking. And then there's the pullback for the retest. Or actually, we've got our retest, and we've actually got we've got two legs down. Hopefully you can see those two legs down to the new low. There's leg one. Then you got a little pullback there. And then there's leg two down. And so now we've got a trend line break. I'm going to make this a little bigger. Maybe it'll be easier to see. So now we got a trend line break, two legs down on a new low, and let's just see what happens. We'll probably continue down. Now we're coming back up. Now we've gotten below what was support line, and look, it acted as resistance. It's still acting as resistance. And you're probably thinking, now I've got this trend line. I knew it was going to be here based on looking, because I've already seen the prices, obviously. But let me explain something to you here. This would still be a good place to be looking for a short, because look what happened. We've got this support area that's now acting as resistance, and prices are trying to get above it. And this line should have been moved up now, because look where the closes are. They're way up here now, and I would have moved this line up to those closes. And you can see after we had that little double bottom there how that's right where prices bounced the next time around. And now we're coming up and testing that. So now we've got a double top right here. We got a failed break up above this resistance area. And you can't go short right there. Now you got a small bearish inside bar. So that's a possible one to go short below right there. And you can see the prices are working on down again now. Look what's happening. That was an easy scalp, easy setup. Any runners are still going at this point, and you see it just clicking along here. We're headed lower. And what I did was I drew copied this line and drug it down to the lower side of price action. So now we know where to look for a possible reverse as well. Prices are still heading lower, and now we're getting a little pullback right here. But look at that move right there based off that failed break higher. And really you had a trap right here because this looked like it was going to be a breakout pullback long, and it just trapped everybody. And this is a failed break above this high. This is really a double top across here. And so you got a failed break above that double top. You got a failed break above what is now resistance area. And now you can draw your trend line down through here as well. And I started off with the closes. Later I would move that if I needed to, but I started off with the closes. And you could have got your line off the low side down here, drawing it right along in here, and copied it and brought it up. Either way, because you would have had this in place before you got this in place. So let me go back and look at this move right here. And the entry would have been about 12.50.75, and this moved all the way to 43. So that's about a 7-point move straight down with no real correction in there. It was a little choppy at times, but it never had a bar that broke back above the other bar except right here. And even if you exited right there, you still got 4, 5, 6 points out of this thing. And so you hear me talk about key entry points quite often, and somebody asked me to talk on key entry points. Well, key entry points are pullbacks to support and resistance area, or pullbacks to trend lines, and they're also longs at strong support and shorts at strong resistance. That's where your key entry points are going to happen. Remember our rules that I showed you a week or so ago. Those rules stated that if it's a trend day, you're looking to sell pullbacks to the EMA and the trend line. And if it's a range day, we're looking to sell resistance and buy support. That's our two rules. And of course we got a lot of other rules around those rules, but those are the two major rules of how we trade. And your key entry points are always going to be at the trend lines, the EMA, or support and resistance. So when I'm talking about key entry points, just like this one, that was a key entry point right at a key resistance area, which also is going to turn out to be a trend line. So let's just watch what prices do. We've kind of gotten a little trading range down here again. But look, they're still going lower. We haven't got to this trend line yet, and that's likely our goal. All right, now we finally touched right here. Let's see what happens. And look, prices bounce. Imagine that. How magical was that? There's no magic to it all. If you know how to draw these lines, you already know where prices are likely to bounce. So when prices bounced here without touching that line, that means two things. That means prices are either stronger than what we're expecting, and it's going to probably reverse, or it means the prices aren't done going down yet. Now, you don't know which, but when prices started overlapping, look at all these overlapping bars in here. There's no reason to be going long there, because that's but anyway, that is congestion, and you don't enter in congestion. The only way to enter on this is a failed breakout, and we had a failed breakout here, but there was never really a good setup, because then you had another couple of overlapping bars, and by the time you got this bearish bar, then it's too close to the low. So, but then when you got this second entry short, now that's a good short. You're okay to go short right in here, and you see it moved on down. We touched the trend line, and here we go. We're working out of there, and you see prices are still heading up. Of course, we got to the trend line. I mean the EMA. That's a 21 bar EMA, and we get resistance there. We always expect resistance at the EMA, but we're still heading higher because look, we expect to go back to this trend line. Prices are heading in. Look at there. They touched that trend line to the tick, and look, prices are holding now. So now we want to think about looking for another setup for another short here. You got the trend line in place. It's already proven itself. You could have definitely got it off this low now, even if you didn't have it up here, so you would have known where to expect this up here. Now we got a bearish bar setting up, and so going short right in here would have been okay. Really, you could have gone short here because this was a second entry short, but once you got the red body, you definitely should have gone short right here, but I probably would have gone short right there. That's close enough. It's a tiny doji at a double top at a trend line. It's a second entry, so there's many reasons why you could go short right there. And you can see we would already be, I believe we've already got enough to 45.50, and prices are already at 44. So we've already scalped out. We're good to go. We got a runner going, and look at prices dropping. And your runner would have survived here. You see, it didn't make it back to there. And look at prices going. Look, and where are we expecting them to go? Down to this other trend line, just like last time. And that's where we might expect prices to bounce or to get a reversal. And look, there we go. Now we've touched it. And we actually went through it a little bit this time. Now when prices go through it, that means they're stronger than you expect. So the downtrend is pretty strong, but usually what will happen when they go through, that's when you're going to get a reversal soon after that. And then look, prices are bouncing. Prices are bouncing. Back to the EMA. That was a second entry short, but again, that's not one you want to take. Let's see if there's enough room to scalp out of there. Your entry would have been 38.25, and you would have had to been out. There's, that's an iffy one. I probably wouldn't have taken that. I think I was done trading by now. And you see that what happened, you got trapped right there if you took it. And prices did come on down, and you would have gotten out if you didn't get stopped out right here, which is likely. And now, of course, we're heading back. The good reason to know not to take that trade right there is because we just came off the low side of the trend line. And that's telling you that now the odds are we're going to the other side. It's just like a trading range up here, except it's at an angle. There's no difference. This is your resistance. This is your support. So learn that. And then we come back up to the top. Now we're turning down again. Now we come lower, and you see we got down here this area, it bounced, and then we're back up here to this again. And now we break it. And we're going higher. But we know not to be looking for a long until we get a retest. There's one leg down. Look at that. There's a second leg down on the retest. So we got two legs down. And then prices started rallying out of there. And then this was the close right here. So hopefully that gives you a good idea of what I was looking at all day long. And you could have had this, pretty much had this line in place by 10 o'clock this morning. So after 10 o'clock, you knew what to expect. These are the key, here are the key trades today. 1, 2, 3, and 4. This one didn't even quite get up there, but there's 4 key trades. There were a couple more in here. There's another one. There's 5. There's 5, 6. So there were 6 really good key trades today. This was a pretty good reversal out of here, 7. So there's 7 key setups today. Now there's other trades in there, don't get me wrong, but that's the key ones. That's the ones that are high. They're high probabilities, the ones that we want to gamble on, the ones that we know that the odds are on our side of us getting the trade right with a very small stop. And you look at every one of these trades, none of them really ever went against you. Definitely not more than a few ticks at the most. So remember that. This is Mac with PriceActionTradingSystem.com. I hope you had a good week. I may take off tomorrow. Tomorrow being Friday is the holidays. It's starting to get slow, and it'll get slower and slower as we get in farther in the holiday. It's also rollover time. So if you hadn't rolled over, I still traded the December contract today. We'll probably roll over tomorrow if I trade. But I'll drop you guys a note and let you know if there's going to be a report or not tomorrow or a chart lesson. But hope you had a good trading day today. I hope you've had a good trading week in case I don't see you tomorrow. But this is Matt with PriceActionTradingSystem.com, and we will see you next time. Thanks for listening.